What's good, everybody? It's your boy, Reckless Ray Dinero, and we are back at it again with another episode of Future Financial Strategies. Welcome back. I'm back. We're back. It is Thursday, the 28th. Looking wild out here. Getting ready to go into Bag Fortification Friday. I hope everybody's having a great week. Hope everybody has liked, shared, and subscribed to the video already because you already know it's going to be a jam-packed episode. So we're going to talk about, it's going to be a pretty succinct, quick hit deal. This week on the panels, which normally influences these shows every once in a while, you get a piece. It normally influences Guns and Butter, which we'll be on later tonight. But it influenced something. We had a conversation, little blurb, where we were talking about money and how people throw money away and it's like it's nothing. And I was like, no, it actually at a certain point does become nothing for these people, because if you're used to looking at your bank account and the number's pretty much the same all the time, no matter what you spend, then the money that you're spending, as far as you're concerned, with your lifestyle and the way that you navigate, it is imaginary. It's pretend money, which is why I named this episode Imaginary Money. Now, we're going to explore a couple of just off the cuff ways that this could be attained. Now, obviously, one of the main ways is just to get like stupid rich. Like if you've got millions of dollars that you've just got growing interest off of, and say you've got $5 million, you keep it in the market. It's getting dividends. It's getting growth. As long as the numbers at or above 5 million, everything beyond that is imaginary. It's not real. It's not actually money that affects you. And that's where we do the terminology of imaginary. So we're going to go over some strategies, some of the things that are out there that could put you in a position to where you're utilizing imaginary money, because that's a state that you want to be in, because at that point you've joined the NBA, the Never Broke Again Club. Because no matter what you do, no matter how much money you spend, as long as you keep at that level, you're never broke again. Now, this is scalable. It's a scalable thing. So if your lifestyle, if you trim your lifestyle down to say where you only need, $50,000, $60,000 a year, and I know people say that that's not enough, whatever. But if you do that, then the number that you need to never go broke again is whatever that number is. It's where you're broken out of the rat race. You're living off of a chunk of money that generates more money is the gist of it, or it's getting consistent growth to where you can get at the money a little bit. You can catch a little bit of it out and live off of the growth of the money. But either way, you're sustained to where you don't have to go to work. You don't have to do anything. You can focus on doing the things that you want to do. I mean, I know there's some of you who do just want to lay down and be a lump on a couch. I'm pretty sure you will die faster that way. But if that's what you want to do, like, you'll have the option to do that too. We're going to talk about some potential ways to get there. So let's jump into it. Let's go ahead and share some screens, do some screeny things. First thing we're gonna talk about here is one that I personally like. It's one of the tools, and remember, these are all tools, folks. They're different tools, but they are tools. So, actually, before we share that screen, we'll keep it pushing. So, one of the first and easiest ways to do, well, actually, I guess it requires work. That requires work, so that wouldn't be a completely passive strategy. But like you build a business. You build a business and scale it to where you don't have to work, and you just collect the payments, and the business makes money, and that creates imaginary money as well, because now you have an asset that has value that's kicking off money. And that's been the tried and true way since the beginning of time. You create something of value, people pay you for whatever it is, it's a value. You hire some people to do it for you so that you don't have to do it yourself. Get a management team in place, scale it, boom, you're not having to physically go into work. Jeff Bezos, for instance, doesn't physically go into Amazon anymore. He built it, scaled it out. Now he does things at a very high level, shows up for some meetings, shakes hands, kisses babies, collects a check. Something of that nature would be probably the easiest to reference way to create imaginary money, because the money that Amazon kicks off that he gets paid on, that he has access to tap, is imaginary to him. Like, that money doesn't really mean anything to him. Now we'll get into that's very high level, but average Joe can go start a business and begin scaling and start building the next Amazon. Like, that is not outside of your power, your purview, or your grasp. It's just a matter of, are you going to put in the work? Are you going to create a better mousetrap? Are you going to be able to compete? You can look at a trade job the same way, except for in trade, a lot of times you end up in this loop to where you have to do everything yourself. And yeah, that can make scaling a little bit harder. But I mean, you get some people that work with you, you're expanding your capability. You can scale out that way to get more money in the door, which is an option if you train up somebody who's as good as you are to partner in the business, and maybe they take over the reins at some point. Then you don't have to physically do it yourself. Then you could be in that Bezos sphere. But like, I mean, business is a good one. It's definitely a good one to get the additional capital, have the ability for growth, not have a limit on your income, not have to answer to somebody or ask somebody to increase your income. Got to get out there and do things. At the end of the day, this rolls down to level one is you gotta work as hard as you can before you can start working smart. You don't get to skip to the smart phase overnight. Got to put in the work. The work's going to happen one way or another. So let's get into it. So we will go here, pop this up on here. So the first and foremost, this is one of the ones that I go to. It's a go-to for me. is the dividend investing strategy. So dividend investing. Okay, so dividend stocks have historically outperformed the S&P 500 with less volatility. That's because dividend stocks provide two sources of return: regular income from dividend payments and capital appreciation of the stock price. This total return can add up over time. Now, there are a lot of people who, for me, this is what I look at when I invest, period. Like, I like things that kick off a little bit of money so that I can continue to invest. It creates a positive momentum snowball, if you would, i.e. the more money you have invested, when those dividends kick out, the dividend goes up, you reinvest the dividends, and so on until you get to a point to where you can start potentially living off said dividends. This is what I am currently working on within my traditional finance portfolio. This is also something that I look at within my crypto portfolio heavily, especially this year. I like everything. I like getting paid while I'm holding stuff. So dividends are a big deal. The issue is, in the traditional financial markets, it takes a lot of capital to get those dividends. So, like, again, this references back to the work hard. Like, you have to build up that capital. You have to be financially disciplined, or you got to put in the extra man hours to get that capital boost. Because if you're older, this needs you don't have as much time if you're trying to retire early. But I do believe the methodology and the mindset shakes out either way. It's like you can gamble on a company that's just gonna grow and hope you're right, or you can build a portfolio that generates money, and then you can use that money to do those plays. And like, that's the way that I look at it. Like, my portfolio, my traditional financial portfolio right now is 100% set up. Like, I have a couple of errant stocks that I didn't want to let go of because I had whole shares, and I'm like, well, these might go up one day. But everything else converted over to things that generate money. Me personally, at this stage in the game, since I'm restarting those portfolios. Because I've been in crypto for so long that like now we're starting to kind of filter the money back over to diversify. I'm diversifying back into traditional finance because most of the investment monies are in crypto. And then third place being real estate. But as I'm moving those funds back over, I'm like 100%. I'm like, I need stuff that pays out monthly. I'm working on my initial startup position, which is QYLD, which is a covered call options trading ETF. It pays out monthly. That's going to be the first position. After that position gets to where it needs to be, I'm going to start using those dividends, because right now all the dividends are going right back into buying additional shares of QYLD. And after I hit a certain level with that, I will shift that over to buying the next position and then rinse and repeat. So that's what we're doing there. It's just very slow scaling in comparison to crypto. It's actually annoyingly slow, but we got to do what we got to do. We got to get to the bag. We got to make it happen. So we're gonna just keep plugging away at it. The other interesting piece in here is like you can use those dividends, because like a lot of people set it up automatically. I don't. I'm very manual with all of my investments. It's something that I enjoy doing, and I'm good at it. So I like being hands-on with that. A lot of people set it on auto because you can set up a drip function, which most brokerage accounts have, where when you get paid in a dividend, it automatically reinvests it into the stock that the dividend came from. For me personally, the reason I don't set it up like that, even in the beginning, is A, I don't want to have to go back and turn it off. But B, I'm using those dividends. I use those to invest within the portfolio also. So when I get my dividends payments at the end of the month, I wait till the very end of the month, beginning of the next month, to make my purchases so that I know all the funds are in there. And once we get to that point, I make with my next buy-in. So like as I'm getting money in there for my dollar cost average, I just add those dividends into the dollar cost average amount and shoot in buy orders and purchase the next chunk of whatever it is that I'm getting. So for me, I like the hands-on effect of it, because I can move into different positions, and yeah, it gives me the ability to scale it the way that I want to scale it versus just having those individual positions growing. I can get them into the positions that I'm focused on. And that works better for me. Obviously, that doesn't work better for everybody, but like they do have functionality in there to where it just auto reinvests for you, so you can kind of set and forget. Definitely something to look at. The next one, and this is one that I see a lot. It's the FIRE movement, financial independence, retire early. And we're not gonna run deep into it because this is not a tool that I use. I know that there's some, especially online, there's people who advocate for this. Me personally, I only have a certain level of discomfort that I am. Well, actually, I don't even know, because like it's just, I guess I'm not focused enough to do what this strategy requires. But let's do some key takeaways, and we'll break down where I differentiate and how I run with my money. So financial independence, retire early, the FIRE movement, is a financial movement defined by frugality and extreme savings and investment. Now, see, that's the frugality part for me. That I'm like I'm frugal, but like I'm only frugal about certain things, because like if I'm buying stuff, I like nice stuff. So yeah, I just like nice stuff. I don't understand. Yeah, no. By saving up to 70% of their annual income, FIRE proponents aim to retire early and live off small withdrawals from their accumulated funds. Typically, FIRE followers withdraw 3 to 4% of their savings annually to cover living expenses and retirement. Detailed planning, economic discipline, and wise investments are key components in achieving a FIRE retirement. Now, this last part, I agree with all of those. You should have detailed planning, economic discipline, wise investments, period. The issues that I have, and the reason that I don't personally use this tool, like some of you might be able to use this tool, is like, I'm already a cut to the quick person, but like if I get something, I'm getting something nice. Like I'm getting what I want. Like I don't do cheap stuff. I don't believe in it. I do not believe in cheap things. It's so astronomically annoying to me. Now, as far as the savings though, I'm with them there. Like if I could save up to 70% of my income, like my target is 50% of my take home pay. That's the goal. So I'm probably at between 35 and 40% right now. But like I enjoy going on trips. Like I'm taking my chick to Oklahoma City to a resort. Like I enjoy doing that. Like things that I do to facilitate this though is like I've shifted my primary credit card that I use so that I can accumulate those points so I can use them for travel. I'm using all of the hacks that I can with my, shout out to Chase Sapphire. For those of you who are looking at the points game, I mean, I could do a breakdown on that because I do use credit as a tool. I just don't like the frugality piece of it is the part that's missing for me, I guess, because while I don't go out of my way to buy a bunch of stuff, like I'm not really a consumer, the stuff that I do buy, I do like it to be the nicest stuff. Like if I'm going to spend money on it, like I'm not going to go get like an off-brand piece of equipment just because it's less expensive and I'm being frugal. Like I'm going to get like the best piece of equipment that I can for what I need to do. Like I could have my computer set up running on one of my Surfaces that I have, because I have a few of those, because like those are inexpensive and they're useful for me at my job. Like they're very efficient for my career path. But they're not the best for live streaming. Like I don't believe in, if I'm going to do something, I'm like, I'm going to do it to the best of my ability. So that's the reason I use a MacBook Pro. Like it's great. Like when I'm looking at my lighting and learning the new setups and trying to figure out what I need to do as I upgrade the studio, it's going to be upgraded with nice stuff. Like I don't, like I want the best. Like why would you not have the best things? Like I don't know. Like I don't have time to clip coupons. Like it's more efficient for me to have Instacart go grab my groceries. Someone shopping for me right now as I'm recording this video, so that I no longer have to do that. Like I don't have, that's one less thing I have to leave my house for, less fuel to spend money on. I mean, gas is back up to $3.50 and inflation's hit the gas here. And I mean, that's here. And I understand that it's even more expensive other places, and people are like, oh, that's inexpensive. But like $3.50 for gas is expensive here. So like people are complaining about it. They're like posting that they're not going to be able to drive anywhere, which is crazy to me. But you know, it's what it is. If your finances aren't in order, then like if you're living on a shoestring budget, then any abnormality to said shoestring budget is going to throw you off. But what we're trying to do over here is get ourselves into positions to where we're not on shoestring budgets. So that's kind of the important part of that. But I believe in saving as much as you can. Like, I don't know, a lot of people in the retirement and the FIRE movement, that was along the Dave Ramsey lines where everybody's just sitting on cash. I do not believe in that at all. But like, I save all the money that I am saving is going into the market at all times. Like I have very minimal cash savings, and I do that strategically for a reason. There's nothing that I can't get access to in 48 hours. So I don't see the need to have a bunch of cash. Like it just doesn't sit well with me. especially with the level of inflation that we're looking at. So me personally, I keep a little bit of cash, the very little bit of cash, like the minimum threshold of cash in my accounts. And everything else is in the market. And if I need a buffer, I have access to like well over $40,000 in credit, so I can front run anything that I need, and then within 48 hours I can just pay it back with cash. Like I just don't believe in holding cash. Like I have all the infrastructure set up in place to where I should not need to have 6 months in cash sitting in a savings account losing money. That's just ridiculous. Like I'll have 6 months, and I mean, technically I could front run my entire salary. So, I mean, I just keep it in the market. I would rather have it in the market. I'd rather have it pegged to the S&P 500 or like a bonds ETF if I'm like feeling scared. But having it sitting in cash right now, that is not the play. That is not the play, in my opinion. But the FIRE movement, they do have, they have like a bunch of success videos where people live super frugal. They're living in tiny homes. They're living an RV life. They're cutting the bills to the quick. They have no amenities whatsoever. I mean, I'm gonna have my Netflix, bro. Like I'm not gonna not be able to zonk out for 30 minutes if I want to. Like I can't do it. I cannot do it personally. It's just a thing. I can't make it work like that. So but for the people who can make it work, it's a tool. It's just not for everybody. And like I do take some of the principles, like I said, the high levels, pushing for the highest level of savings that you can to get into the market. We save in the market. Absolutely. Now when they're talking about the withdrawals, I'm not at that phase yet, but at least with my crypto portfolio, I can leverage that portfolio as I see fit. We got a little in-home banking setup strategy that we're running off of that, which is nice. And taking pieces from the dividend strategy, like I do have access to funds that are generated from within the cryptocurrency market to fund other positions within the cryptocurrency market. We're getting ready to experience. I will be able to, convert those over into long-term holdings, which then will also be able to be leveraged and or saved. And, we keep it pushing. So now we're going to get to the last and the majority of my strategy and where my level of expertise lies. So we're going to have a talk about this. And this is just one coin, but you got to understand that Bitcoin is the market. As much as people like to be tribal about their coins and talk about how their coins are, this one coin's going to be it. It's not. And let me blow this up. It's not. Bitcoin's the market. When Bitcoin goes up, the market goes up. When Bitcoin goes down, everything goes down, basically. There's nothing, stuff is not moving independently in the cryptocurrency market. It's all based on Bitcoin. So we're gonna look. And so this was this was before I was in, but we'll look every year. So we'll look at the percentage returns. Now, so you've got in 2011, you had a 1,473% return. In 2012, you had a 186% return. In 2013, now late 2012, early 2013, that's when I was entering into Bitcoin via mining. I built a computer, was mining some Bitcoin, kind of didn't get it, was just kind of doing it as a hobby, and we're off to the races. 2013, 5,507% return. 2014, crash year, negative 58% return, which means that if you bought this year at the peak, you lost 58%. Like it was a bad year. Now, 2015, 35% return. 2016, 125% return. 2017, another bull run year. (1,331% return. 2018, crash, post bull run. 73%, negative 73% return. 2019, 95% return. 2020, 301% return. At the crest of a worldwide pandemic. That was a bull run year for those of you who didn't know. 2021, 90% return. 2022, crash, post bull run. Negative 81.02% return. Now, some interesting facts about Bitcoin. We're gonna go through this. This is some interesting moments in the history of Bitcoin, just to throw out there, and then I'll give my thoughts on this. In March 2010, Bitcoin began trading on the now defunct Bitcoin market, one of the first ever cryptocurrency exchanges. Next bullet point. A Florida man named Laszlo Hanyens bought a pizza with 10,000 Bitcoin in May of 2010. That's how inexpensive Bitcoin was in May of 2010. It was 10,000 of them to get a pizza, making it the first time anyone ever used the cryptocurrency to purchase something. Also, it spawned a national holiday, which is Bitcoin Pizza Day. In June of 2011, Bitcoin saw its first significant price spike, climbing to a value of $29.60, up from just 30 cents in January before declining again later that year. The second half of 2013 marked another major spike from $68 on July 4th to $1,237 on December 3rd before declining again. Another bull run. One of Bitcoin's most significant increases happened in 2017, with its value surging from around $1,000 at the start of the year to $19,345 by mid-December. Next bullet point. Touched on 2018. The Bitcoin hype cooled in 2018, resulting in significant declines. Its lowest value was around $3,232 in December of that year. I remember that. I was super bummed out because I was trying to get to my mining funds during the peak, and I couldn't. And then when I did get to them, I thought there was going to be next to nothing in there, and I found $6,000, and it was great. It was even though I was sad that I didn't get what I thought I was going to get, I was definitely happy with what was in there compared to what it costed to build that computer, which was not much. In 2019, Bitcoin saw another spike, hitting $13,813 on June 26 before declining. After seeing modest ups and downs through October of 2020, Bitcoin's value began to surge again. It hit an astronomical high of over 66,000 in November of 2021. We was there for that. Bitcoin dropped by over 75% in 2022. This is the cycle. Now, my thoughts on Bitcoin / the cryptocurrency market. Me personally, I'm all in on it. I'm here for it. I've been here for it. I've been here a decade. I love it. It's the best opportunity that most people are ever going to have in our lifetime, as far as attaining generational wealth, as far as changing your station, as far as changing the trajectory of your life, your family's life, in a financial sense. And in regards to securing the bag, this is going to be the biggest bag fumble This is going to be the internet in the 90s for some people, where they sat there and said, oh, I could have done that, but they're still broke and dusty and exactly where they were at. And not only that, actually, what you're going to see is you're going to see a bunch of these idiots. And I say idiots because they are, that are going to chastise the people that get into the market. They're going to have snide comments. They're going to have rude things to say. Like, it's really interesting, because when I first got into the market, I had a buddy of mine, actually a frenemy. We'll say a frenemy. He's a communist. Definitely, he's a Marxist. Definitely all the ist things that don't like anybody who tries hard. But the juxtaposition here is, dude works at Google and makes six figures. So like, it's some sort of weird survivor's guilt because he bettered himself. So now he feels like all the people who make money are bad. But when I first got into crypto, I was very adamant. I was a zealot. I was an evangelist about the space. I love talking about it. I still love talking about it. I talk about it more now than I did then, just on a higher level platform versus screaming into the ether on Facebook about how great Bitcoin is and how great crypto is. But he used to get on my post all the time and, tell me that like it wasn't going to work and I was throwing my money away and that I'm dumb and all this stuff. Just his little snide, I'm better than you remarks. And one of the things that he coined was like, he used to always say, oh, well, it's only a matter of time with your little magic internet money. It's not gonna do anything. And it was all cute and stuff until I paid off my credit card debt, all of it, and got my first property. Now, then it wasn't a joke anymore. The shoe was on the other foot. And then, happen to see if I'm okay. And I always am, because I have no interest in, like, you can ride through the waves. Like, I'm not gambling with the rent money. Like, I'm not house poor. I'm not existing in a state to where like I live like have the mindset of somebody who's in abject poverty, because I'm not in abject poverty. I'm not intending on going back to there. I don't intend on going back to where I came from. It's forward only, winners only. I mean, it strikes a nerve with those who are not out here actually trying to win, or those who have won and feel guilty. I do not feel guilty. I do not feel guilty for working hard. I do not feel guilty for having the rewards of going out and hunting and bringing home what I kill. I do not feel bad about that. I do not feel bad about using all the tools available, because if you look out here, these people who are in these spaces, they want to hem you into using one tool and like act like they're morally superior because they don't use credit. Like, who cares? If you're trying to win, no one cares how you look at the finish line. It's just about winning. You use all the tools available. I would never tell people not to use any tools. I will 100% point out the ones that I don't use and give the context on why I don't use it. Like, I'm not going to live like I'm in abject poverty to save an extra 15%. It just doesn't benefit me. Like, I don't need to do that. So I don't do everything from the FIRE movement, but I can look at the FIRE movement and point out the things that work with the system that I have set up in my strategy. You take the tools, you take the things that work for you, you discard what doesn't, and you don't have to be bitter about it. Like, the people who find success doing the FIRE movement, I love that, because I want people to win. It's just, I would not find success in that, in a sense that like I would be fulfilled while I was doing it. So I'm not going to do every single bullet point of the strategy. I'll take the bullet points that work with what I'm already doing, and I will do those things, and I'm going to win. Like, if you're tracking your numbers and your metrics, this isn't even an argument. You can tell year over year whether you are increasing your net worth or not. You can tell if your cash flow is increasing or not. You can tell whether you're making the income and hitting the metrics that you want within whatever space or not. Like, I know exactly how much dividend money I have coming in from my traditional accounts. I know exactly how much dividend money I have coming in from my crypto accounts every month. Like this month, smash my goal. Like buy it. Like that's how I know we're going into a bull market, because the bull market, the income from your staking and stuff, and like, while I might not, because I'm not into the risky stuff that I was in years prior, and I probably will most likely not be going back, won't be the same. But I do know that as I start, because like my stretch metric during the bear market is low because you just don't get a lot of dividends. It's like hard to find good APYs. It's hard to find stable pools. You're constantly moving money around. And you also have the price fluctuation of the assets themselves. So like if you're getting paid in a cryptocurrency and the price is fluctuating, then if it goes down, the income goes down with it, because that's what you're getting your dividend in. Now, if I'm looking at it and like I'm tracking those metrics, I'm like, hey, I'm having a really hard time hitting this stretch goal. I'm falling short every month. And then all of a sudden you start hitting it, and then you start surpassing it. Prices are going up. Like that's indicative. Like things are going on. Like people are coming into the market. Like you can tell. So like I'm prepared now because I'm looking at what's coming in. I'm looking at the prices on things. And you know, it becomes, how good are you at managing the money? How good are you at getting the money into vehicles where you can sustain it? Are you riding your investments to zero? Are you riding these overnight coins to zero that you know aren't long-term investments, but you like feeling like you're doing something? Like there's a lot of mental fortitude that comes with being in the crypto market. So I understand why people feel salty about it, because it is hard. It's not something where, I mean, it's actually not hard. It's not hard. It's just the easy stuff is very boring in comparison to the glitz and the glam of some of these other positions. So this is more like hard level, I guess, for people who are not mentally disciplined and can't look at numbers and just understand that they're just numbers on a screen and navigate accordingly. But for me, this is where I've been all in on it for a decade. I'm going to continue to be all in on it until there's something else that offers a similar or same opportunity, or the opportunities are just completely gone, which I don't see happening anytime within our lifetime at this point, with the time I got left. Like I think we're going to have crypto definitely until they put me in the ground. And it's just going to be what it is. This is the future. And those people who are getting in now are still ahead of the curve on that, because the adoption isn't there. Like it's not where it's going to be yet. There's still a lot of room for growth. So with that, we're going to tap out. I'm going to go back to regular old me. Now, I hope you guys have enjoyed this. We went over some strategies. I'm trying to dial this back into solutions, because things are just going to get harder. Things are going to get interesting, but it's going to get chaotic. It's going to get turbulent. It's going to get scary. But where there's chaos, there's opportunity. And we're trying to stay focused on the opportunity and not get consumed by the chaos. So if you like the video, definitely give me a like. Give me a share. If you've got communities that would benefit from this information, this type of conversation, share the video, guys. We're not trying to get rich over here by ourselves. Also, there's always room in the wolf pack over here. Shout outs to Natasha Vincent, to where you guys can come and be a part of this community as well. We don't restrict communities. We have multifaceted communities. Also, this evening, tap in with us for Guns and Butter. We're going to be starting between 7:30 and 8 p.m. Central Standard Time to have the conversation. We're going to be talking money. We're going to be talking politics. We're going to be talking crypto. We're going to be talking whatever you guys want to talk about. So hit me up in the chat. We do answer questions live. We are very I mean, I know that most panels, they do not watch they tell people not to look in the chat. I'm always looking in the chat. I see what you say. I respond to you. I acknowledge you. So come over and tap in with me over on Guns and Butter tonight. It's your boy, Reckless Ray Dinero, and we are out. We're going to switch it up a little bit, though, because we talked about the money tonight. Peace.
Here comes the money.
Here we go. Money talk.
Here comes the money.